Hello everyone, welcome back to another daily trading forecast video. Now today is the very first day of yet another trading week. So today is the 31st of May, and right after today the monthly candle will be closed. So just take note of that, and we will be entering into a new month. We are going to kick off with some of the weekly forecasts which I have posted on tradingview.com. So the first one, we have the euro against the US dollar. So a quick one just to go through what I have posted. So euro dollar posted another weekly gain, but leaving a long upper shadow for the second time as it continued to face resistance. So this long upper shadow, I'm actually referring to the weekly time frame. And although euro dollar has been constantly trading higher, the weight has started to shift towards overbought. The dollar might gain more demand amid falling asset prices, which may cause temporary pullback on the euro dollar's current bullish trend. So this week, we will attempt to sell within the current supply zone and probably add on to our short positions, if any, as it starts to break below the riding channel. So for euro dollar, this week I am kind of temporary bearish. In the long run, I still believe that the dollar will continue to weaken, and of course euro dollar will then climb even higher. But because of what happened last week, actually we did saw a attempt to break out of this riding channel, and it is right within this supply zone. So there is a possibility, and given this structure, as you can see, looks something like an inverse head and shoulder, there is a good chance that it might just come down back into this demand zone right here from about 1.20. That's where maybe the price will continue to really climb from there. So that is my take for the euro against the US dollar. As of today, right now, maybe just have a quick one. Look at the euro against US dollar. Right now, price is very little changed. I mean, one of the reason, of course, is because it is coming to the end of the month of May, so volatility is expected to be low, or at least we'll wait till the US session. Of course, maybe the US session, then we might see some volatility from there. But in any case, we're still seeing higher highs and higher lows, so it is really hard to say right now. But obviously, you can see a lot of resistance right here as it attempt to recover. So I think there is a really good chance that if it continues to stay resisted, chances are it will just go down. But if it's able to break upwards, then we want to take note of this level, because this is as you can see, is somewhat like a double top formation, especially clearer in the 1 hourly time frame. So this is another level we can look to sell if you are also bearish on the intraday. Okay, so moving on, let's take a look at the next one, which is the gold. Alright, so this is the 4 hourly chart. Okay, so gold was pretty much as bullish as expected, resulting in the biggest monthly gain in 10 months. So yes, I've been very bullish on the gold, mainly because of rising inflation, and moving on, the gold continued to prove its value in times of uncertainty. Yeah, as I said, rising inflation coupled with falling asset prices, such as Bitcoin and some of the stocks, causing higher demand for the safe haven assets. So we continue to see the gold pushing higher towards 1950 before any strong selling may occur. This price 1950, I've been talking about it for really quite some time. So this week we shall continue to look for buying opportunities. Should the price pulls back at first, we can look to buy at 1880 followed by 1863. So let's go and take a look at the gold price right now. Okay, wow, this is so messy, just give me a second. Alright, so right now we are seeing the gold price is still resisted right at the top. In fact, at the very beginning of today, the gold price has already started to climb, reaches the top, and right now there's a little bit of resistance, but to me it does seem that it's going to break higher anytime. If we are lucky enough, we will still see the price coming back to maybe somewhere right here at 1900 okay, for a re-entry opportunity. If it's able to go down even further, the best price, of course, I'm always looking at is right here at 1888, because this is the resistance and support level. If it comes back to retest, then of course we'll have a better chance. But the best price, is actually somewhere right here, right? This is at 1881, because this is obviously a very strong supply zone, demand zone, as this is the breakout area. So and of course it's at the bottom of a rising channel as well. But going even lower, then we'll be back to the equilibrium level. So which I don't think it will be able to go there. It's not that easy, especially for gold. Gold demand is really high. There's a lot of news on gold, which is really positive for the gold right now. So like I say, until it reaches 1950, there's going to be barely any strong selling pressure to be seen. So so that's pretty much for gold. As much as possible for myself, I try to buy rather than try to sell the gold. And I mean, if you are going to sell the gold, you better get off the market as soon as you see a pretty good wave coming down, and once it reaches some sort of support demand zone, you better just take profit and wait for a buy opportunity instead. Alright, so that's for the gold. Moving forward, let's take a look at the next one, which is the NASDAQ. Alright, so for the NASDAQ, the US markets continue to recover from a major pullback in early May, so resulting in another monthly gain except for NASDAQ. Alright, so basically all the US indices, such as Dow Jones, S&P, had a monthly gain, although it's very little. But as compared to NASDAQ is actually went down, so it's forming a bearish candle in the month. Unless today it actually went up, it actually showed up, then that might turn the table. So anyway, however, recovery has slowed down over last week, and the bull seems to has become sluggish. But the same goes for the bear, as we don't see any significant attempts in the market to sell. So you can see that there's a lot of resistance right here, back at the neckline of this double top, and there hasn't been much selling. As you can see, lows are getting higher and volatility is really very small. Obviously, at the same time, there's also lack of buyer, maybe due to resistance. So yeah, vice versa. So the stock market is somewhat expected to rise amid heavy government spending, but we also continue to face challenges of rising inflation. So as we know, the stock market is really pretty much eating on all the government spending, especially from the Federal Reserve, from the US government. So which is what helps to support the stock market price. And but however, as we know, that due to rising inflation, this is somewhat dampening the markets, which is why we also see a sell-off in early May. So this week we plan to attempt going short for NASDAQ if it continues to stay resistant at 13,700, right at this resistance level. So right now we are seeing actually a little bit of maybe I just play right. So it's somehow forming an inside bar. We shall see how that goes. But I think we can definitely make an attempt to sell right now, or maybe later on. I think the risk ratio still makes sense. So right now we're still seeing this consolidation. It might come down from somewhat like a W shape before it actually goes up even further. So but anyway, otherwise the main plan is still to buy, alright, as the price pulls back with prices such as 13,400 and 12,800 should it breaks a new low. So the very first level is right here, definitely at the bottom of this rising wedge, and if it breaks lower, then of course we will look for the next support level right here. As you can see that this is the breakout area, so which causes a demand and price rebound off from here. So if it comes back down, then we'll definitely see a retest right here. Alright, so that's for NASDAQ. I'm not going to go through the charts for NASDAQ. Let's move on to the next one, WTI. So the crude oil, oil prices continue to stay uplifted and amid rising commodity prices due to fast rising inflation despite the recent sell-off in March. So the consolidation phase seems to be ending as a breakout of a symmetrical triangle that occurred last week, and the week ended with price closing above the consolidation. So this is pretty much the symmetrical triangle, as you can see, and it broke out from the from this consolidation. It even stand on top of this resistance at 66.6. So apparently very bullish for the crude oil, rising commodity prices. So besides the entire consolidation, which has now reached 3 months, came after a major breakout of a 13-year falling trend line. Thus, we can expect more bulls to come both technically and fundamentally. So this week, expect the market to breakout or what, but not excluding a possible pullback at the beginning of the week. So if the price drop first, we can look to buy between 66 to 65.4 region. And should the price go ahead and break higher, simply wait for the pullback towards the breakout level to buy the gain. So this one I will just go to the charts and just go through a little bit. Alright, so the first thing is the 13-year trend line, which I'm talking about, is right here, right? As you can see, this trend line has been broken. So this trend line has been broken, and right after that, it went into a 3 months of a consolidation, right? So from March to early March till now, that's about 3 months. And finally, we saw that it actually broke out of this symmetrical triangle, close above, and the last day itself, the price still closing above the consolidation. So there's a very strong sentiment to buy the US oil right now. And so if, let's say, the price came down at first, then we can look to buy the gain as it comes back into the demand zone. Alright, and if it does really rebound from here, I think we'll definitely see a very strong bullish run. Very good way for us to take profits, to profit from. Okay, so well, in that case, due to rising inflation and of course the technical breakout stuff like this, there's no way we are going to be bearish on the oil market. And I just also want to go through a piece of news right here. Maybe we'll just read through a little bit. Oil closed highest price in more than 2 years. Strong US economy data fueled a broader market rally, and Wall Street stuck to bullish views on climbing commodity prices. American drivers are traveling almost as many miles on interstates as they did in 2019, and jobless claims have fallen to a fresh pandemic low as business reopen. So Goldman Sachs analysts said commodities continue to face incremental tightness in the second half, with little evidence to suggest enough of a supply response to derail the bull market. So the optimism around demand is overpowering concern on Iran. So the Iran supply risk is being put on the back burner for now. US is the biggest consumer, with more of the country opening back up. The driving season could be pretty decent. I think the thing is that we are really facing a shortage of a supply for the oil in the coming future, and demand is rising because you know economy is opening up. People are starting to drive. The miles, which as they mentioned, being recorded, is back to the pre-pandemic level in 2019. So obviously demand is going to be high. If supply doesn't mix demand, of course the price goes up. So that's another very good reason for a rising oil price, apart from rising commodity price as well. Alright, so that is pretty much for the US oil. And last but not least, we have the Bitcoin. So the Bitcoin is still under selling pressure throughout the week, and volatility has shrunk to an all-time low. So as much as Bitcoin is heavily discounted, conviction to buy Bitcoin remains in a slumber amid heavy criticism from big crypto influencers such as Elon Musk, and of course constant crackdown on the crypto mining factories or whatsoever in China. So the crypto market is expected to be to remain range bound. As you can see, right now it's still ranging within a, or rather it's consolidating within a symmetrical triangle. For the good few months, what I mean by that, of course this is not going to take months, but when I talk about months, is between this supply zone and this demand zone, or maybe even lower to this demand zone. Alright, so that's what I'm talking about, what I refer to as a range bound. So this week we continue to look for selling opportunities, firstly at 38,600 followed by 41,000. So yes, I try not to buy Bitcoin because I felt that there will be even more sell off all of a sudden, so I'd rather stick to selling as of now, because this is a sentiment right now, right? And so a quick one, just to look at the Bitcoin markets. Alright, so yes, as you can see, I leave this around here just to remind me that this is how I expect it to turn out, which so far alright. So far it is still supported right here, haven't made any significant rebound. But in any case, if it's because right now it is still within this consolidation, so we can actually wait for a pullback. If let's say it gets supported, pulls back to this level, then we can definitely look to sell the gain. If it goes higher, then that would be somewhere right here, okay, right at this supply zone, then we can try to attempt another shot. So that is just for the intraday view. So it's, I mean, for now, just trade it as a range bound market. There should be plenty of opportunities to profit from it on intraday basis. Of course, if you choose to buy at the bottom, I think that is not wrong as well. Alright, again, just make sure you set a stop loss, because when it drops, it can be very drastic, and you don't want to really lose big because of that. Alright, so today that will be for all. Hope you guys enjoyed the video so far. If you like it, subscribe and like my video, and I will see you again tomorrow.